Hi, Assalamualaikum. So we are from Group T and today we will be presenting about analysis of risk-based financial ratios in Islamic banking institution of Maybank Islamic Berhad. Hi, Assalamualaikum. My name is Fatin Farina binti Misfan and today I will be presenting about introduction part. So for background and bank overview, in Malaysia, Islamic banking plays a very important role. It offers Sharia compliant financial services to those who want ethical, interest-free banking. Maybank Islamic Berhad is the Islamic banking arm of Maybank, Malaysia's largest bank. Since it was established in 2008, it has grown to become one of the top Islamic banks in Asia. Maybank Islamic provides a wide range of products and services for both individuals and businesses, all aligned with Sharia principles. By 2023, it maintained a strong position in the Islamic banking market due to its good governance, compliance with Bank Negara Malaysia's rules, and focus on financial stability. So next, scope and justification. This study focuses on how well Maybank Islamic Berhad managed its risk in the year of 2023 based on its annual report. We look at 5 main types of risk. The first one is credit risk, when borrowers might not repay loans. The second is market risk, changes in the market that could affect profits. The third one is liquidity risk, the bank's ability to pay its short-term obligations. The fourth one is operational risk, problems from system errors or internal issues. And the last one is Sharia non-compliant risk, the risk of not following Islamic rules. These risks were chosen because they directly affect the bank's performance, reputation, and trust with customers and regulators. We use public financial data to calculate and explain risk-related ratios. We also compared the results with industry standards, highlighted any concerns, and gave suggestions for improvement. This analysis helped us understand how strong Maybank Islamic Berhad's risk management is, and it also gives a clear picture of risk practices in Islamic banking.
Let's begin with the methodology section. This study used a quantitative approach to evaluate Maybank Islamic Berhad's risk management performance for the year 2023. Specifically, we focused on calculating and interpreting risk-based financial ratios across 5 major areas: credit risk, market risk, liquidity risk, operational risk, and Sharia non-compliant risk. The primary data source was the bank's audited financial report for the year ending 31 December 2023, which ensured that all information was both up-to-date and reliable. The process began by extracting key financial data from the balance sheet, income statement, and supporting notes. From there, we applied standard financial formulas to compute each relevant ratio. These ratios were not just calculated, but also interpreted in the context of regulatory benchmarks such as those from Bank Negara Malaysia, which is BNM, and international standards like Basel Accords. Where possible, we also compared the results against industry average and past performance to identify trends or red flags. This approach ensures that our assessment is not only accurate, but also contextualized and meaningful. That's all from me. Thank you.
To summarize the 2023 credit risk analysis for Maybank Islamic Berhad, the NPF ratio of 1.06% suggests that while impaired financing is under control, there is a slight upward trend that needs attention. The financing loss provision ratio of 1.33% reflects the bank's proactive compliance with MFRS 9, showing that reserves are adequate for expected credit losses. With a coverage ratio of 125.48%, Maybank shows strong resilience against potential impairments, ensuring it can absorb shocks without hurting profitability. The risk-weighted asset ratio of 34.96% tells us that the bank maintains a low-risk asset profile, which strengthens its capital adequacy position. However, the net charge-off ratio of 0.43% is a concern. It indicates higher actual losses and suggests recovery efforts must be improved. Overall, the bank's credit risk is well managed, but continuous attention to borrower quality, recovery strategies, and early warning system will be crucial going forward.
Next is the summarization of market risk. Maybank Islamic remains a strong player with solid financing growth and also stable profit levels. In 2023, it had an interest rate sensitivity gap of 23.29 million ringgit, meaning its assets are more sensitive to profit rate changes than its liabilities. This is good when rates go up, but also risky if the rates fall. Its net interest margin on NIM is 2.55%, which shows decent income from lending and also investing. However, it's a bit lower than other banks. The price-earning ratio is 1.76, meaning investors are more cautious, likely due to a drop in profits. Next, there are three main concerns. First, the low PE ratio shows the market isn't confident in the bank's future earnings. Second, the small interest rate sensitive gap means the bank is vulnerable to rate changes. And third is NIM, while okay, is slightly lower than industry average. This also could impact long-term competitiveness. So for recommendations, to reduce risk, the bank should better align its asset and also liabilities to reduce profit rate exposure. It should also boost other income sources, like offering digital banking services, so it's not too dependent on lending alone. Lastly, to win back investor confidence, the bank must manage costs well, improving its earnings and also clearly communicate future plans.
Hello and Assalamualaikum. My name is Nur Suhala Aisyah binti Suhaimi. So, for liquidity risk, we look at how well Maybank Islamic can handle short-term financial stress and long-term funding need. First, the current ratio is very low, about 0.18. That's not unusual for bank, since they manage liquidity actively and don't just sit on a pile of cash. But it does mean the bank needs strong internal policy in case of a market shock. Next, the loan to deposit LTD ratio is around 0.98, which means the bank is using deposit productively, but it also doesn't leave much breathing room if a lot of withdrawal happen at once. The LCR and NSFR aren't directly stated in the financial report, but based on the note, the bank seemed to comply with Bank Negara requirement, but still not showing the actual figure, lower transparency. One red flag we noticed in that cash holding dropped from RM 15.1 billion to RM 7.8 billion. That's something that you should be explained more clearly. So overall, the bank seemed to manage liquidity well behind the scene, but the strongest stakeholder trust, we recommended increasing the liquidity asset buffer slightly, publishing actual LCR and NSFR, and also improving funding diversity and a real-time liquidity tracking. Those changes will make their liquidity position not just stable, but also more transparent and resilient.
Now, let's examine the operational risk indicators for Maybank Islamic Berhad in 2023 and what they tell us about the bank's performance. The most striking figure is the cost-to-income ratio, which stands at a staggering 240%. This means the bank spent more than double its income just to operate. This is significantly higher than the industry benchmark of 45% to 60%, and it raises serious concerns about operational efficiency and sustainability. On the other hand, the operational risk loss ratio is very low at 0.053%, which indicates that despite inefficiencies, the bank has strong internal controls to prevent or minimize losses from fraud, system failures, or compliance issues. This reflects well on their risk management practices. Operational risk also accounts for 12.14% of total risk-weighted assets, highlighting that it plays a strategic role in the bank's capital planning. This is in line with global trends, where operational risk is gaining prominence, alongside credit and market risk. The employee productivity ratio at 145,024 ringgit per staff is slightly below the industry range of 150,000 to 250,000 ringgit. While not poor, it suggests that the bank could benefit from boosting staff performance and output, especially considering its high operational expenses. Lastly, the IT expense ratio of 11.28% shows that the bank is investing heavily in technology and digital transformation. This is a positive sign, but such high spending must be matched with matched with measurable outcomes such as improved efficiency, customer satisfaction, and revenue growth. In summary, while Maybank Islamic Berhad has a solid grip on operational risk events and digital readiness, its cost structure and workforce efficiency need urgent attention. Addressing these issues will be essential for long-term sustainability and competitive advantage. That's all for the operational risk. Thank you.
My name is Muhammad Farid, and now I will talk about the summarize of Sharia non-compliance risk. First is the profit sharing investment account PSIA to total deposit ratio. It shows a low percentage, which at 12.99%. That means the bank must to face potential of high risk and ensure the investment are highly Sharia compliant. Higher PSIA ratio will help to strengthen the commitment to Sharia principle like mudarabah and wakalah to encourage equitable profit and loss sharing. Next, we'll look at tawarruk financing to total financing ratio. For this ratio is considered as not disclosed because the tawarruk is not available in the annual report of the bank. That means Maybank Islamic Berhad just rely on the commodity-based structure due to the concept of tawarruk is quite similar as conventional loans mechanism with interest which known as riba. After that is about the zakat distribution ratio, which indicates at 0.018%. This is very low percentage because some of the zakatable are not included in the zakat calculation. The bank can enhance their transparency by referring to AAOIFI standards which complying with Sharia principle and in ethical way. Lastly is the two of the Sharia non-compliance events which were reported in 2023. The first event, subsequent change in business activities for financing granted to a customer resulting in revenue generated from rental of property used for non-halal activities. The second one, compounding of accrued profits restructured terms financing account. Maybank has taken initiative to settle the issue by spend for RM 679,000.
Hello, my name is Nur Suhaila Aisyah binti Suhaimi. So, here are the main recommendations that we think Maybank Islamic Berhad should focus on to improve their risk management. First, for credit risk, even though their NPF is still within range, the high net charge of ratio show that their post-default recovery effort could use some work. We suggest improving recovery thing and also implementing early warning system to catch credit issue earlier. For market risk, the interest sensitivity gap is positive, which is good, but it made them vulnerable to withdraw. They should balance their asset and liability better and also work on gaining investor trust to reach their PE ratio. For the liquidity, even though their ratio comply with B&M, the actual LCR and NSFR aren't close, which made them hard to gauge. They should be more transparent and maybe increase their liquidity buffer just a bit. When it comes to operational risk, that 240% cost to income ratio in a way too hard. So yeah, time to autonomy and streamline things. Also, they are spending quite a lot on IT, which is great, is efficient. So they need to track if that investment is really paying off. And finally, from the Sharia side, they need to push more people to join PSIA account, be more transparent about tawarruk, and seriously rethink how zakat is calculated and distributed. All these steps, if done properly, can really strengthen the bank position, not just in Malaysia, but as a leading Islamic finance institution.
Lastly, for conclusion, first is strength. Maybank Islamic is doing well in a few key areas. First, it has low credit risk, meaning not many customers are defaulting on their financing. It also has a healthy profit margin, shown by its net interest margin of 2.55%. This tells us that the bank earns well from its financing activities. Another good sign is the positive interest rate sensitivity gap. This means that the bank will benefit if profit rate increase. Lastly, its capital ratio is strong, showing the bank is stable and also can absorb potential losses. Next is for concerns. However, there are a few red flags. The cost to income ratio is too high, which means the bank is spending too much to earn income. Its current ratio is low, so it doesn't have enough cash for short-term needs. The price to earning ratio is low, showing low investor confidence. And from a Sharia perspective, only 30% of deposit are in profit sharing accounts, and the zakat distribution is very small. This could affect the bank's image and also compliance. For suggestion, to improve, the bank should use digital tools to cut operating costs and become more efficient. It should also work on recovering bad debts more effectively. To meet Sharia standard, it needs to promote more profit-sharing accounts and increase its zakat contributions, while also reporting them more clearly to the public. In conclusion, Maybank Islamic is a strong and profitable bank, but it needs to fix a few weak points, especially in cost control, liquidity and also Sharia practices to become even more competitive and also trusted in the Islamic banking market.